Hello, everyone. My guest today is Ricky Robinson. He's the CEO at Shorthand, maker of the visual storytelling platform trusted by the BBC, Business Insider, Refinery29, Honda UK, Save the Children, and hundreds of other publishers, brands, nonprofits, and universities. They make it simple for storytelling teams to create memorable stories that audiences want to share. Ricky, are you ready to take us to the top?
Absolutely.
All right. This is scaling content creation is very difficult, especially when you start adding video elements and it's not just, blog posts anymore these days. I'm eager and excited to talk to you because I think it's a problem so many people have. So tell us what Shorthand does and how you make money. What's your revenue model?
Yeah. So these days we do annual subscriptions. It's just annual subscriptions. We don't do monthlies. And we sort of sit in that space where, prior to Shorthand coming along, news organizations and big brands would have an internal development team to create these sorts of stories on a custom basis, so case by case. So expensive, very long time frames to publishing, and Shorthand kind of just comes in and makes that a lot easier. So we reduce time and cost by more than 10x in a lot of cases.
And walk me through how this works? So like the Made Up to Look Beautiful, Sent Out to Die campaign by the BBC, right? So this, as I scroll through it, it's a blog. It's essentially a full screen, full bleed blog post. There's other interactive kind of elements built into it. Walk me through the back end. How did you make this magic happen?
Yeah, so all the magic is really, I guess, two parts. So the editor is really magical to use. A lot of our customers say, it's the best part of their day, using Shorthand to create stories. So we put a lot of effort into that. And then the rest of the magic is all in the browser on the front end. And I think one thing that we do that, a lot of other platforms don't, and I guess why the likes of BBC and Business Insider are using Shorthand is because we kind of make sure that all these interactions work across every device, every platform. So we do put a lot of effort into that.
So give me an example of Business Insider. So like what's a post they used you on?
Yeah, so Business Insider, they use it for commercial content. So they do sponsored content for, likes of Volvo, Cartier, those sorts of brands. And that's a fairly big use case. So news publishers wanting to offer their brand customers something special and a cut above what they've been offered previously, but also something that they can do on a repeatable basis, right?
Yeah.
So again, in the past, they've done these stories, but it's taken a lot of effort, and now they can kind of create a lot of these stories in a very quick time frame.
Yeah, makes sense. Walk me through what the average price point is per year. I want to avoid going down every customer cohort. I'm sure you have many, but on average.
Yeah, absolutely. So it's $6,000 US.
Got it. $6,000 per year. And what generally do people get for that? Is that like one piece of content per month, or how do you define that?
No, so we'll talk about that in a minute. But I think one of the lessons we learned was not to offer it on a per piece basis, and we'll talk about why in a minute. But essentially, it's based on features. But the big differentiator between whether you're paying in the tens of thousands for Shorthand or less than that is whether you're exporting the story onto your own infrastructure. There's a big difference between customers who want and need that ability and customers who are happy to have their stories hosted on Shorthand's infrastructure. And so there's a big difference in value there.
Walk me through how you're tackling something like load speed, right? So I've tested a bunch of these sites before I did it, and the load speed was really, really bad because it's such interactive content, right? Some of these things, I imagine on the BBC, you're not actually hosting them. So how do you handle things like load speed?
Yeah, so load speed is an interesting one. I think you'll find that for the kinds of stories that these are, shorthand stories do load fast. And one of the things that
if they're hosted on you and not exported.
Yeah, well, it depends. Like a lot of our customers do a good job of putting that on, decent infrastructure, CDN in front, all of that kind of stuff. One thing that Shorthand is that's different to some other platforms is that it's static files, right? They're flat files. So you are loading the HTML, the assets, CSS, all off just a normal web server, right? It's not being dynamically served out of a database. So that's one thing that is quite different to other solutions, and it's a big trend on the web at the moment. Is these static files, right?
Yep. So when did you launch the company? What year?
So we got started. We incorporated in 2013, but there was no product until 2014.
Okay, and so how did you support yourself over that time? Did you guys raise capital?
Yeah, we did. So we have an investor, well-known guy in Australia called Graham Wood. So he's backed us. He's the only backer at the moment.
How much there in the beginning did he give you?
Yeah, so 3 million Australian.
Okay, and total raise to date is how much?
That's it. Yeah.
Oh, just the 3. Okay.
We raised another 500, basically to open up shop in New York.
Okay, so you raised 3,500,000 Australian dollars, which is equivalent to about 2.5 million US dollars.
Yeah.
Okay, great. And just from one investor, that must be nice.
Yeah, I mean, Graham's really supportive. He's always been very interested in independent journalism, good journalism. He funds The Guardian in Australia, so The Guardian newspaper, and he's had a bunch of other projects in this space before.
And over the past couple of years, what have you been able to scale to in terms of total customers using you guys?
Yeah, so we're just shy of 250 customers at the moment.
That's great. Now, if I take that 250 times, now you said that 6,000 obviously was annually, but that puts you at about a $1.5 million run rate. Is that about accurate?
That's about accurate. Yeah,
that's great. That's very good. And talk to me about growth. So if you're at about 1.5 in ARR today, where were you about a year ago?
Interesting. About a year ago, we were doing. Where are we? We're doing about 60 MRR.
So you've more than doubled.
Over this year, I think the last Australian financial year, which kind of ends in June, it's been a little bit slower than the previous year. And I think the reason for that was these story limited plans that we offered, right? So we offered these plans for $3,000 and then $3,500, which gave you like a couple of stories. And that was great for growth. Like they sold by the bucket load. The problem is that a lot of those customers, once they created those stories and exported them, that was it. They were done, gone. And so churn over this last 6 months or so has not been great. In fact, it's been terrible. Like our churn is like 2%.
It's like 2% logo churn per month?
Yeah. No, that's revenue churn.
2% revenue churn per month. That's net or gross revenue churn?
That is gross.
Okay, so you're not adding back any upsells?
No.
Okay, great. And so why do you say that's horrible? That's actually, I mean, that's not horrendous.
Yeah, it's for us it is, because we know where we were before.
Where were you?
Our churn was awesome. So less than half of that.
Okay,
right?
So what changed?
So the story limited plans, right? So offering these things where they create 2 stories and that's all they need. And they move on. So I think our problem there was in plan design, and I think we've sorted that problem out now. Like we obviously don't offer those plans anymore.
But churn's higher.
Churn is high at the moment because we've got annual plans, right? So we sold a plan a year ago. One of these $3,000 plans, they're churning now.
Oh, got it. They're not renewing at the new price point.
Yeah, right.
I see what you're saying.
So that's been our issue. But if you remove all of those story limited plans, our curve looks a lot nicer.
Yeah, I mean, look, I would argue that 2% revenue churn per month on a gross basis, generated by the fact that you're asking people to essentially, who were paying $3,000 to now pay $6,000 for the same thing. That's actually not bad at all. Walk me through new customers you're onboarding. What's your CAC?
Yeah, so our CAC, so it costs us 50 cents on the new ARR dollar.
Yeah, so you spend really 50 cents for that new dollar of ARR.
Yeah. So I guess it's $3,000 to bring on a new customer.
Yep, 3K CAC, and so then you're getting paid back in about 6 months.
Yeah, roughly that. Yes.
Yep. But is it all paid up front? So on a cash basis, it's instant.
Absolutely. Yeah.
Yeah. Interesting.
Yeah. So our cash. I mean, the last Australian financial year, we had a cash flow positive year. So it was.
And growing, you said about 100% year over year. That's healthy.
Yeah.
Talk to me about team size. How many team members and where are you based?
We have 10 FTE. We're based all over the world. So we have office here in New York, London. So London, the UK, Europe is kind of our main market. That's where we got started. That's where we got traction with a lot of the big publishers. The US is kind of just coming up and maybe going to overtake that over the next 12 months. And then we have our development team in Australia, in Brisbane mainly. And we have a guy in Japan and another guy in Seattle. So we're kind of very distributed, very remote.
That's great. And walk me through kind of in terms of what you're doing with the company today. So are you looking at raising more capital to drive growth?
We're not sure. Like we think, obviously we've done a bit of analysis. We know what levers we have to pull. If we spend this much here, we're going to grow by that much.
Tell me about one of those levers.
Yeah. So we've spent nothing on marketing, literally nothing. We've grown to where we are today just based on publishers coming in, creating great looking stories, putting them on their website, people reading those stories going, holy cow, how did they make this? Most of the stories have a Shorthand logo at the bottom and people click that and come through to our website. So I'd say 30-40% of people reach us that way and the rest is pretty much all just search. And so we've done very little there to optimize that search as well. That's a big project for us at the moment is SEO.
And so how are you tackling that project? Does it have to do with hiring SEO experts or what?
Yeah. Just bringing in, we've done a contra deal with an agency that kind of specializes in that. We have a data scientist on the team, very, very smart cookie. There's just so much low-hanging fruit for us in that space because we haven't done anything. So just looking at, what keywords should we be putting on our homepage? Really simple. That most startups that of our size and our age would have done this stuff by now, and we just haven't.
Let me ask you a question. So you're from a price point perspective, when you start analyzing the effectiveness of a potential inside sales team or putting touch on a sale, your price point's a very tricky one because it's high enough where someone doesn't feel comfortable putting their credit card on an online form without a phone call, but it's too low really to pay too much in terms of a commission, right? Or a kickback to whoever the person is closing the sale. So how do you solve that?
Yeah. So you see, I don't know whether you've seen our pricing page, but we've just put that pricing page up and we've got these, our export plans, which are tailored plans. The top end tailored plan there really starts at 24K, right? But we sell those for often a lot more. And that's based on, the features that they get, how many sites they're putting this shorthand on. And so we are slowly pushing that ACV up.
So got it. So you'll put touch on those accounts, but
yeah,
I imagine
absolutely.
You also have a lot of no touch sales coming in every month.
Yeah, we do.
Yeah,
we do. And that's just there's such a range of people who want to use this tool. People who are upgrading from Squarespace,
sure.
For example.
Yeah,
they go onto a Prelude plan, and then at the top end we've got the likes of the BBC, Honda, etc. So
if you did decide to raise capital, about how much would you target raising?
That's a really good question. I wouldn't want to take too much, to be perfectly honest, but we've had offers, not offers. We're currently discussing, there's one really well-known firm that is talking about a $20 million investment. And that to me is like, that's going to change our company. And we're not sure we want to do that, right?
Hold on. Yeah. Investing at a $20 million valuation or putting $20 million in? 20
million in, which seems crazy to me. And the reason that
are they buying the whole company?
I think they'd probably buy out Graham's stake,
which is what, about 30-40%?
No, he owns so at the moment he owns actually the whole company. And when that deal, if that deal gets done, it restructures the company essentially.
Wait, I'm so confused.
Graham ends up with
why are you as a CEO taking all the risk building this thing out and you own no equity?
So I was not a founder.
Who founded it?
Graham did actually. So Graham has backed a lot of these publishing projects in the past. If we had our time again, I wouldn't have structured the company like this.
When did you come in then? What year?
I came in 2015.
Okay, and what happened to the start, like the founders? Graham wasn't happy with them, so he fired them? What?
Essentially.
Yeah.
Yes.
Okay. That, by the way, happens all the time. Okay. So they're not involved at all anymore. Now, why don't they own any part of the company?
Who knows? They didn't take equity to begin with. I was not part of that. No idea.
Okay. Interesting. So Graham owns 100% of the company. You're basically an employee. You have no equity, which that's a whole other conversation. I'm confused. What's motivating you? But maybe what's motivating you is potentially someone else buying out Graham for 20 million and then giving you 10% equity or something and saying, hey, run this, scale it, and build it.
Sort of. What is motivating us is that this is an awesome team to work for. We have a lot of fun. We have great customers. Our customers,
yeah, but Ricky, come on. You're an entrepreneur. You're taking all the risk. I believe what you're saying. Like, that's the right answer. But you're taking all the risk. You own no equity.
Correct. Today.
Yeah. So what is your path to equity? It's finding a buyer who will then also say, hey, Ricky, now we bought Graham out, we gave him a great return. Now we want to give you 10% equity and incentivize you to keep building the company.
It's going to be something like that. Yes.
Yeah. Interesting. Okay. So do you take a $20 million deal, or actually does Graham take a $20 million deal?
I think we'd need to consider that. It will change the way that Shorthand operates.
Well, of course.
Shorthand. I mean, the story so far is, we've kind of dug ourselves out of a hole, and now we're cash flow positive, and things are kind of going great, right? And then we look at investment. We say, like, do we want to change that?
Well, just be clear. Let's not call it an investment, because it's not. Someone else would basically buy out. It's a sale and then a restructure of the cap table.
That may be the way it goes down. That may not be. There have been there are multiple different paths to how this could work.
Okay, well, if one of the paths is someone investing 20 million, right, and owning 10% of the company, that gives you guys a valuation of something that I would just want to understand how the hell you do that, because 20 million Absolutely. For buying 10%, that's like a $200 million valuation on 1.5 in AR. That's like 200x.
Completely agree. It boggles my mind as well.
But just to be clear, you don't have offers for 20 million to buy 10% of the company. That's not what we're talking about. We're talking about a buyout.
No, we have what we have discussed, and I'll be clear, there is no offer.
Yeah.
What has been discussed is that we reach something like 2 to 3 million ARR.
Yep.
At that point, it'll be basically a 30% cut to Graham, right? So it will be as if Graham has owned 30% of the company in the past. And then the investor will come in by 30% of the company.
Okay, so let me just play this through. You have 3 million a year from now. You're coming back on the show. Nathan, we hit $3 million in AR. Great. Someone came in. Graham currently owns 100%. Someone pays 20 million and buys 70%, which means Graham now owns 30%. Where do you fit in this picture?
No. So the investor will buy 30% of the company. So 30% will be Graham. 30% will be the new investor.
Okay. Well, where's the other 40%?
The rest is the team.
Yeah, but someone has to buy that from Graham, though. Someone has to buy that from Graham, though. He owns it right now.
Yeah, absolutely.
So the company's going to pay him for that extra 40% to then make it basically an employee option pool?
I'm not sure what you mean there.
Graham currently has 100%. For him to get down to 30%, someone has to buy 70% from him. You're saying an investor is going to take 30%. Well, there's still 40% unaccounted for. So how does...
No, I'm just saying it'll be a complete restructure of the cap table.
It will be, though, generated by an investor coming in and essentially buying 60% from Graham. They'll keep 30% as the investor and then incentivize you with the other 30%.
Yes.
That's the only way that can... That's how that would free up. I just want to make sure I'm understanding you correctly.
Yeah.
Oh, okay. Interesting. I'm just confused why not demand that, like, say this now, right? Like, hey, we're building a company. I'm driving growth. I'd like 10%. Put me on.
Look, the next board meeting is going to be interesting.
When is it?
That's on the table. That's on September 12th.
Okay, good. We're going to have you on September 13th. All right. All right, Ricky, let's wrap up with the famous 5. Number 1, what's your favorite business book?
So favorite one, I probably Insanely Simple by Ken Siegel.
Okay. Number 2, is there a CEO you're following or studying right now?
Not really, no.
Number 3, what's your favorite online tool for building your business?
I'd have to say either Front or Zoom.
Front or Zoom, yeah, both great companies. Number 4, how many hours of sleep do you get every night?
I feel like this question is like a race to the bottom competition for CEOs and founders. Not enough. Nowhere near enough.
So how many
last
hours?
night, I don't know, 5.
5. Okay. By the way, I if someone tells me like they have a great company but they only sleep 4 hours, I immediately ignore the interview and take none of their advice. If they say they have a great company or okay company and they're sleeping 10 hours, I'm way more interested in that advice.
Yeah. Absolutely healthy. I think it's a problem in startups at the moment.
Yeah. And what's your situation? Married, single, kids?
Married, 2 kids, 11 and 8.
And how old are you?
I am 39.
Okay. Last question. What do you wish your 20-year-old self knew?
I wish I knew what focus really was. I'd tell myself, you think you know what it is, but you really don't.
Guys, there you have it. He would have had to try to have a better understanding of what focus meant and what it was. Joined Shorthand, but he is not the founder, but joined Shorthand back in 2016. That was 3 years after launch. The early investors who owned about 100% of the company basically kicked out the first 2 founders. He's now running it, driving great growth, 100% year-over-year growth from about 60 grand in monthly recurring revenue in August 2017 up to about 125 grand per month today. That's from 250 customers that pay on average $500 a month, but those are all annual plans. So about 6 grand per year. Again, those are usually paid all up front. 2.5 million raised all in. That's US dollars. 2% revenue churn per month. That's on a gross basis, spending about 50 cents for a new dollar of ARR. Or said differently, they're spending about $3,000 to acquire a new $6,000 customer with a 6-month payback period. Team of 10 people based in remote locations, but mainly New York City and London. Thank you so much, Ricky, for taking us to the top.
Thank you very much.